Hi everyone, this is a technical analysis on USDJPY. Let's start with the fundamental overview first. The yen is having another good week as the USDJPY pair dropped to new lows as treasury yields continue to fall. We had two possible catalysts yesterday. The first one was the much weaker than expected US and FIB index, which dropped to a 3-month low. There wasn't an immediate reaction in the markets on the release, but things started to move as the American session began. The second one was a comment from BOC Macklem, where he said that bigger cuts are possible if the economy and CPI were weaker. There's generally a groupthink with central banks, so the market might have projected that to the Fed's decision next week. The probabilities for the Fed to cut by 50 bps at the upcoming meeting increased to 35%, and the soft US CPI report today might get us back to a 50-50 chance between 25 and 50 bps cut. For the BOJ, the market sees a 100% probability of no change at the upcoming meeting and a total of 8 pps of easing by year end. Now, on the daily chart, we can see that USD JPY eventually broke through this August low and almost touched the key 140.20 level. The buyers will likely start to pile in around these levels to position for a rally into the 150 handle, while the sellers will want to see the price breaking below the 100 handle to increase the bearish bets into new lows. On the 4-hour chart, we can see that we have this downward trend line defining the current bearish momentum. The sellers will likely lean on the trend line with a defined risk above it to position for a break below the 140 handle with a better risk to reward setup. The buyers, on the other hand, will want to see the price breaking higher to increase the bullish bets into this next trend line around the 146 handle. On the 1-hour chart, we can see that the price bounced from the lower bound of the average daily range for today and is now approaching the resistance around the 141.70 level. This is where we can expect the sellers to step in with a defined risk above the level to position for another drop into the 140.20 level. The buyers, on the other hand, will want to see the price breaking higher to increase the bullish bets into the trend line. For the upcoming catalysts, today we get the US CPI report. Tomorrow we have the latest US jobless claims figures and the US PPI data. And on Friday we conclude the week with the University of Michigan Consumer Sentiment Report.